Hello, everyone, and welcome to Edison TV. My name is Aaron Atkar, an analyst in the healthcare and investment trust teams here at Edison. Today, we are joined by Ailsa and Marek from the International Biotechnology Trust, a UK-based investment company offering access to the rapidly expanding biotech sector through an actively managed, diversified investment approach. Welcome, Ailsa and Marek.
Hi, Aaron. Good to be here.
Thank you.
So to get started, can you give us a high-level introduction and overview of the International Biotechnology Trust?
Sure. So IBT, or International Biotechnology Trust, is about £300 million in size. And what it does is gives our shareholders exposure to the whole cross-spectrum of the biotech industry. And what I mean by that is early stage venture names coming out of university, all the way up to the mega cap NASDAQ-listed biotech companies over in the US. The board of directors, who appoints the manager of the trust, has agreed to have between 5 to 15% in venture funds. So that gives a bit of spice to the performance in the past, historically. The fund itself has been around for 30 years, so it's pretty established. Managed by Marek and myself, who you can see on the line now, certainly on the public markets. And then the venture part of the portfolio is managed by a venture firm called SV Health Investors. The umbrella firm is Schroders. So we used to be at SV and we moved to Schroders in November 23. And Marek and I took over as lead fund managers back in March 21. So we're well after our 3-year track record. And finally, I should mention that we have a dividend, 4% of NAV, that's paid out twice a year, so 2% from the trust to our shareholders. And I think that's it. Yeah, that's the summary.
Fantastic. So more generally, can we hear in your own words the potential benefits of gaining exposure to the healthcare sector through an investment company as opposed to direct holdings?
Yeah, sure. So an investment company is a fund, effectively, that means we can have numerous biotech companies in there, therefore diversifying your risk. So everyone that's going to listen to this call knows that biotech is not the safest sector. It's one of the riskier sectors. So when you have more than 1 or 2 direct companies, immediately you're going to be diversifying risk. We have circa 60 names to 70 names in the public part of the portfolio. And what we also do is mitigate risk on very particular level on the company level. But in terms of being a closed-ended fund, when you have an open-ended fund and you get redemptions, if the market crashes, open-ended fund managers have to sell stock in the market low. And the inverse of that's true. They have to issue in the highs and buy stocks on the high because people tend to have money flows going into open-ended or funds generally in good times. So closed-ended fund, you're less likely to have that sort of impact. Also, you can gear. So we can gear up to £55 million in our trust. We use it actively. So if we feel that the market's oversold, we can gear up. And if we feel like the market's looking a bit toppy, we can take the gearing off. We don't tend to have more than 15% gearing, however. So, and also you can have venture. So open-ended funds can have venture investments, but people have shied away from that in recent years. But closed-ended is seen as a much more sort of sensible vehicle to have exposure to the venture part of the industry.
Excellent. So we see that the fund has performed particularly well in recent years in terms of M&A deal flow. Can you share a couple of recent examples of important transactions across your holdings and outline the outcome this had on the portfolio performance?
It's a really, really good question. And we at IBT, we try to operate like a business development department in biotech. My background is from within the industry. So I've been looking at in-licensing and out-licensing deals all my career prior to joining IBT. So how we view projects and companies is that they need to address a high unmet medical need. They need to have a good patent estate, etc. This is what pharma looks for. And those companies become attractive and subsequently get acquired. So we are not like focusing on M&A per se. We just look at the features that we like, and those companies tend to be acquired. And during the last couple of years, since 2020, we've had 25 M&A deals. And I would say Seagen, which was acquired by Pfizer, was our biggest holding at the time of acquisition. Same applies to Horizon, which was acquired by Amgen. And also in the unquoted portfolio, relatively recently, iBio was acquired by Merck. So we had a very good hit rate, but this probably because we look at the features that makes these companies attractive.
Excellent. So on the theme of M&A, what do you believe will be the most attractive therapeutic areas or targets looking ahead? And how do you go about positioning your portfolio to maximize the potential benefit from these insights?
That's a really good question. How we try to operate at IBT when it comes to these therapeutic areas. We always know, and we have been for many years, that we believe the orphan or rare disease space has always been attractive because it offers addressing a very high medical need. If you get approved, you are one of the few or maybe the only drug available, which makes it easy to reimburse, and it's relatively profitable at that sense. Relatively recently, we have seen central nervous system coming in vogue, epilepsy, depression, ADHD, which has become a bigger issue since the pandemic. People staying at home, and we see that these are being made in this field, and the unmet medical need is ever increasing. And always due to demography, we know that cancer is on the rise, has been for many years, but the good thing of it is that we have better and better tools to address that. So we know that new drugs coming through will be acquired by larger companies because we also know how the industries, the ecosystem works. Biotech is responsible for majority of innovation, and also I would say I think between 60 and 80% of new drugs approved emanate from biotech or academia, which means the pharma needs to fill their pipelines. And with these attractive areas, this is where we see these. So it's not a theme, it's a general way the industry works. And of recent, we have also seen that obesities have come up, obesity as a therapeutic area, which we know since Novo Nordisk and Lilly have come through with their drugs approved. And we think the next generation drugs addressing administration, less side effects, will probably be attractive for pharma to acquire.
There's been a lot of discussion recently around high drug prices and how this is being managed in the US, particularly following the Inflation Reduction Act in 2022. How do you see the results of the upcoming US presidential election impacting this and the overall healthcare sector in general?
Yes, so this is a very popular question from our shareholders at the moment. You're absolutely right. So the Inflation Reduction Act was passed in 2022 by the Dems. Within that, they attached a section about drug pricing. Now, this has been a political football for generations, at least decades, going into the US presidential election. It's battered about and very highly contentious and also bipartisan. So in the bill, what's going to happen is from 2026, the top 10 selling drugs will be negotiated by Medicare. Now, Medicare makes up about just over 20% of the payer in the US. So it's a significant portion of who buys these drugs. And they basically, their priority of Medicare is to treat elderly people. So we're looking at big diseases that affect the elderly. Those are the drugs that are going to be most impacted. We don't really know the finer details of how much they're going to be discounted just yet. We're getting an idea, and it doesn't look massively material. Suffice to say, it's our view that this will put more pressure on the pharma industry to acquire biotech companies because some of their revenues are going to be shaved earlier than the IP expiry, for example.
Fantastic. Ailsa, Marek, thank you very much for the insightful discussion. Look forward to following the progress of the company and the sector in the years to come. Thanks again, everyone, for your time. Have a good day.
Thanks, Aaron.
Thank you.